Hi folks, this is a video about income tax. So I've got some definitions here of things that are, so you'll see all of these things come up in the questions and they're all referred to. So they can get quite wordy and there's a good few of them there. So if you try and think about it like this, if you imagine that all of that there was all of the money you earned in a year, okay, so that's what gross pay is. Okay, so adults can earn a gross pay of anything. So you could earn 50,000, okay, or if you say own your own company or something, or you own a business that's really successful, you might earn something massive like 120,000. Like that'd be a really big salary to get in a year. So gross pay is everything that you earn before you pay tax. So it's before any tax is paid. But then obviously you need to pay tax on that to the government. So this standard rate cutoff point, what that means is everything that you earn up to the standard rate cutoff point, you're going to pay at a lower rate of tax. So standard rate cutoff point. Okay, so just say if your gross pay was 100,000, then so the standard rate cutoff point always changes, and that's given by the government. So it could be something like, it could be anything, but it could be, we'll say 26,000 or something like that. So if that's the standard rate cutoff point, what that means is that you're going to pay 26,000 at the standard rate, and the standard rate is generally around 20%. So that's standard rate of tax. And then everything above that, so everything above that line there, you're going to pay at the higher rate of tax. So if the standard rate cutoff point was 26,000, and it might not be, but if it was, then you'd have to pay the rest of your 100,000, because it's 100,000 that you earn altogether. You'd have to pay the rest of that, so that would be 74,000. Yeah, and that's generally paid at kind of 40%. So what you'd end up doing there is you'd get 20% of 26,000, because that's the standard rate cutoff point, and then it's 40% of the rest of it, which is 74,000. So the way you get the 74,000 is you have to do 100,000, take away 26,000. So you always take the standard rate cutoff point away from the gross pay in order to get what you pay at the higher rate of tax. So I know that might sound a bit complicated. There's one other last thing here. So this here would be all of the tax that you paid in. So you'd find 20% of 26,000. So you should have hopefully done that before, how to find a percentage of an amount, so you can multiply it by 20% on the calculator and it'll give it to you. And you also have to find 40% of that. Okay, and when you add those two things together, then that would be all of the tax that you have to pay. But there's one other thing to take into account: a tax credit. This is an amount of money that is subtracted from the total tax. Okay, so subtracted from the gross tax, and it's basically it's a good thing. So a tax credit is a good thing. So an example of a tax credit might be if you're a single person and you're living alone or something. The government might give you an extra tax credit. So that's just something that they give back to you, basically, that they take off the tax that you pay. So that's kind of the gist of what's going on with income tax. Let's look at a full example now. And you'll see all of those things are referred to in the question then. So a woman earns income for the year is 45,000. So that's the gross pay. That's everything. So that's our full box kind of up there, where the way I represented it. She has a standard rate cutoff point of 28,000 and a tax credit of 4,000. If the standard rate of income tax is 20% and the higher rate is 40%. It's generally always those. It changes so every year. Well, not every year, but a lot in the budget when the budget happens in Ireland and towards the end of the year. So how much income tax does she have to pay anyway? So she earns 45,000 altogether. So this is the way I generally lay out questions. So I'm going to split it into standard rate and higher rate. And this is just a good way of showing the examiner in an exam that you know how to split it up and you know how to and you know the differences between them. So everything up to the 28,000 she's going to pay at the standard rate. So because that's the standard rate cut-off point. So everything up to there she's going to pay at 20%. Okay, and then everything after that, so the rest of it up to the 45,000 she's going to pay at the higher rate. So what you have to do is you have to do 45,000 take away 28,000, and that figures out how much you have to pay at the higher rate. So 45,000 take away 28,000, and that's 17,000. So it's 17,000 multiplied by 40%, because that's the rest of them. So this figure here and this figure here, they should always add up to give you that. Okay, so some of the money you earn is paid at the standard rate, some of it is paid at the higher rate. Right, so it's easy enough from there. You just need to work out what 28,000 or what 20% of it is. Now you could change it to a decimal. You could do 28,000 multiplied by 20 over 100 or multiplied by 0.2 as a decimal, or you could just use the percentage button on your calculator. Yeah, so you should get 5,600, and then to get 40% of 17,000, you're going to do 17,000 multiplied by 0.4 or multiplied by 4% on your calculator, and you'll get 6,800. Right. So they have to pay 5,600 at the standard rate and 6,800 at the higher rate. So you have to add the two of those things together, and you should get 12,400. So that's what's referred to as gross tax. So that's your gross tax. Now there is one last thing. Remember what we said up there before? There's one other thing left in it, and it's a tax credit. So a tax credit is good. So you have to pay all of that 12,400, but you actually get to take away the tax credit from that before you pay it. So it's good. So it's you subtract 4,000, and then that's going to be 8,400, and that's what's referred to as net pay. Don't be too worried about these terms over here at the start. As long as you can understand the general idea, it's enough at the beginning anyway to get through questions. That shouldn't be 84,000, it should be 8,400. So 8,400, that's all of the tax that you have to pay then. And then what you can do is, to get what you actually take home, so your net pay, you can do 45,000. Sorry, that should have been net tax there. Take away 8,400. And you should get 36,600. and that's your net pay then. That's what you get to take home. Okay, so here's another question then. So John earns 56,000 altogether, so you can attempt this one yourself if you want. So try and break it up into the standard rate, or standard rate and higher rate. So work out what you must pay at the standard rate. So that's up to the standard rate cut-off point, and then work out what the higher rate so that'd be the rest of it then up to the 56,000, and then find the percentages, add them together. You can take away the tax credit then. I don't think there is a tax credit here actually. There should be one in. I'll stick one in there. So tax credit is let's say 2,300. Okay, so put that in as part of the question. Yeah, so just when you've figured out the tax, then take away the tax credit at the end, and then that'll be it, and you can take that away from your gross pay. So if you want, you just pause the video now and have a go at it, and then play it on, and I'll correct it. Right, so up to the standard rate anyway is 24,000. So you're going to pay that at 20%. So then I must do 56,000, take away what the standard rate cut-off point is, so that's 24,000. So that'll be 32,000 that's left then. So 32,000 times 40%. So then 24,000 and 32,000 added together gives you your gross pay of 56,000. Okay, so you can work out what 24,000 is times 20% is on the calculator. So just do 24,000 times by 0.2 or times by 20 and use your percentage button. So you should get 4,800. And then do 32,000 times 40% on the calculator, or times 0.4, and you should get 12,800. So you see they're paying a lot at the higher rate here. So then you can just add those two amounts. So you have to pay this and you have to pay this. So therefore you can add the two of them together, and it's what you have to pay all together. And you should get 17,600. So that's basically it. It's just one thing left to do. Well, kind of two things left to do. So your tax credit is 2,300. So I can take that away from the tax I have to pay then. And we get 15,300. So this is the net tax that you have to pay then. So that's the tax that you actually have to pay then when your tax credit is subtracted. So I can just take that away from 56,000. So that's my gross pay. That's my net tax. So I have to take one away from the other, and that's how much I get to take home then. Okay, so I'm only left with 40,700 then, so still a nice bit of money, but you can see how much the government actually takes. So the government, if you earn 56,000, well, under those conditions up there, then you actually the government takes basically 15,300 off you, which is quite a lot. I just want to show one thing at the end. Basically, if you're putting this question into that kind of diagram I had up there before, just to try and make it clearer again. So the 56,000, that's gross pay. That's everything. So your standard rate cutoff point is, here is 2,400. Sorry, it's 24,000. Okay, so below that then, so I have to pay 24,000 at 20%, and then the rest of the money you earn. So the rest of the money out of the 56,000, down here we found out was 32,000, and you have to pay that at 40%. Okay, so that's kind of where it comes from then. So the whole thing is 56,000. Okay, I have to pay 24,000 of it at 20%, and I have to pay the rest of it at 40%. So, and that's generally the idea. And then tax credit is the good thing at the end that you take away from your tax, that, and then you can, that's all the tax you have to pay, and you can take it away from your gross pay, and that's how much you get to take home. So that's it.